Hello traders and investors. This video marks the first installment of a Bitcoin Cycle Top series. Instead of creating a lengthy 1-hour video that may test your patience, I've opted to produce a series of short videos. Each video will focus on one cycle top, and the final video will summarize the common themes between each top. As in every educational situation, let me remind you of the contract. My job is to produce the lesson and explain it to the best of my ability, and your job is to ask questions and not take anything I say for granted. I would appreciate your feedback in the comment section or by email. Now, before I begin, let me address why it is essential to recognize a cycle top. And the answer is that Bitcoin's cycle tops signal a phase of severe devaluation, let's say of at least 70%. So we aim to avoid the financial loss incurred by holding Bitcoin throughout a bear market, and if possible, benefit from either selling high and buying low, or trading Bitcoin or on the short side. Not to mention to avoid stress and to avoid losing money on your altcoin portfolio, because if Bitcoin is going down, the rest of the market is going down harder. The question is it possible to recognize a cycle top in time? Because anyone can recognize a cycle top in hindsight. However, at the moment, it is not always clear that the cycle has stopped, and it is a subject of intense debate. The purpose of this video series is to present each Bitcoin's cycle top through the lens of technical analysis, and I will use classical TA techniques and indicators, nothing fancy, okay? And I will also demonstrate how the writing was on the wall at every Bitcoin top. The first top I will review is the November 2021 cycle top. I'm not going to get into the debate of if April was the true top or November was the top. It doesn't matter really. I will review the November top and the April top and every other top chronologically. I have prepared slides for you. Each slide will summarize the phases leading into the cycle top and out of the cycle top, but I'm not going to go over the slides here with you. You will be able to download the slideshow through the Telegram channel. The purpose of this video is to serve you in practical charting, and we will move to practical charting, okay? Okay, October 2021 cycle top practical charting session. The purpose of this charting session is to show you how, by using simple TA tools, nothing fancy, a momentum indicator, support and resistance levels, chart patterns, market structure, everything is very basic really. You could have already deduced that we are at a cycle top. I will begin from the price action leading into the cycle top from July 20th, 2021. In July, we already understood that price made a bottom after a 50% drawdown, but the bottom wasn't confirmed. When is a bottom confirmed? A bottom is confirmed when price makes a bullish change of character. What do I mean? On the daily chart, on July 26th, the daily candle closed above the previous lower high. This is the first confirmation of a trend change. When the following pullback didn't violate this change of character line, it was the final confirmation that the trend is shifted to the upside. Why is it important? Okay, because you can tell me, New Thought Crypto, I have balls. I bought at 28.5. Why do I care? You care because at this point, you know that the trend is shifted to the upside, and you can drop your short positions, okay? Not only for a long position. If you are a confirmation trader, this is where you would have opened a long position, but it is more important to know when to close a short. This is when you should have closed your short position. Following that, we had a, a nice price increase to the upside. The chart pattern is a rising wedge. A rising wedge is an early warning sign. Why? Because a rising wedge is bullish but bearish. What do I mean bullish but bearish? The price is going up, but the rate and the angle of the price is unsustainable. This was a warning sign. A rising wedge with a bearish divergence because price is going up and the momentum indicator is going down is a sure sign that the uptrend is not sustainable and that price is going to break to the downside. Okay, so far everything is normal. When is the first point that we could have understand that something is very wrong? On September 7, 2021. Why? What happened on September 7, 2021? On September 7, 2021, El Salvador declared Bitcoin as legal tender, meaning Bitcoin officially became money. Okay? First time in history. What was the reaction? A 20% drop. Now, the hallmark of a bull market is that price is going up when the news is positive, but bad news don't have any noticeable effect. The hallmark of a bear market is that the good news are a sell the news event, and the traders are using the positive press, the positive news to sell their positions. So September 7th was a warning sign. Okay? Now, it was a warning sign, but still, price found support at 40,500. We had a nice bottoming structure, bullish divergence on the daily. On the short time frame, it was even more obvious, but it's not important right now. Following that, the uptrend resumed on September 29th. Why? October, you know the drill, everyone knows. Look at the price, it's going up almost vertically. What's the chart pattern? The chart pattern is a rising wedge. Not only that, okay, I want to share with you a tip, but before you put this tip to action, go over to your chart settings and lock price to bar ratio. The ratio doesn't matter right now. Just lock price to bar ratio. Then go over to the trend line menu and pick trend angle and pull the angle the same way you would have drawn a trend line and look at the angle degree. Okay, what was the angle degree? 75 degrees. 75 degrees. Anything above 45 degrees is not sustainable for the long term. Okay, so we had almost a vertical price action. Vertical is 90%, 75% is pretty close to vertical, and these things don't last. We made a new all-time high and a buying climax according to the Wyckoff methodology. Following that, the trend line broke to the downside. If I was holding a long position, this is where you drop the long position, okay? However, the market was still bullish, hopeful. We found support at 57, almost 58K, and this is called in the Wyckoff methodology the automatic rally. Now we have a distribution range. Why? We have a high, the buying climax. We have a low, the automatic reaction. This forms the distribution range. Why is it important? Because when the price loses the distribution range, you have 100% confirmation that the uptrend is over and that the markdown phase began. Okay, we had a buying climax, automatic rally, price chopped around for a few days, sharp move to the upside, and another rejection. Why is it important? It's very important because this candle on November 10th was a clear indication that price is going to get rejected and move lower. Why am I saying that? This is a pattern that Gann talked about and other traders also discussed. When price is moving above a resistance level, but closing the candle, the daily candle, below the resistance level, it's a sign that the market is rejecting the higher prices and going down for a correction. So we had a candlestick pattern. We had a Wyckoff pattern because this move above all the previous highs is called in the Wyckoff methodology uptrust after distribution. It's a move that the market maker makes to take out all the stop losses, okay, to sell high in order to buy low later. So it tripped all the stop losses. It's a warning sign. Another warning sign, look how careful the market maker was not to take price to 70K. Why? Because 70K is a psychological number, and surely many traders had their short positions set to 70K. Following that, we have a chart pattern. Which chart pattern? Look here. How is that chart pattern? What's it called? It's called a double top. We had a double top, candlestick rejection, uptrust after distribution. What else did we have? Bearish divergence. Look here. Price made a higher high. The momentum indicator made a lower high. So how many warning signs did we have? Candlestick is 1. Uptrust after distribution 2. Psychological number 3. Double top 4. Okay? Bearish divergence 5. Did I get it right? I hope so. Okay? Now, enough warning signals to let you know that price is going to go down. Do you know now that this is the cycle top? No. But you should know enough to understand that this market is way too overheated and it's time to sell high. Okay? Following that, we had one more attempt to break the resistance, which wasn't even close. Okay? A last point of supply. And these sharp rejections to the downside tell you the story. It tells you everything you need to know. Following that, we had 3 attempts to get back inside the range, and you can see that traders took the opportunity to short the market here 1, 2, 3 times. Okay, so there is a saying by Stephen King, I think: fool me once, shame on you; fool me twice, shame on me; fool me 3 times, shame on both of us. Okay, so don't get fooled the 3rd time. This was a golden opportunity to sell high. Following that, we entered the markdown phase and the bear market. So you can see how simple TA tools can give you the top signal the same way as fancy indicators and $50 and $70 a month membership cards and everything else. You don't need it. Common sense and objectivity shows you the way. You only need to remain objective, okay, and not get carried away by the public mania. That's all I have for you on the 2021 cycle top, and we will resume this series in another time. Thank you and goodbye.